Hello, everyone. Welcome to today's session. If you don't mind, just letting me know, just type in that question box if you can hear me and see me. Okay, and we will jump right into it here. Let me get my drawing tool right here. Let's jump into current market conditions, talking about S&P 500. Well, really all market conditions. We're sitting in a bullish state, bullish in a bull market. And towards the upper end of that range, not a whole lot has changed really in the last month. We're just continually to kind of chopping away at that overall uptrend. We're seeing momentum, which has been moving towards that bullish range or towards the extreme range now after yesterday's move. And then also we've got the breadth indicator, which is also in that bullish trending stage, just not up in that extreme zone quite yet. Sentiment certainly is in that upper range. Okay, Kirk, thank you very much. Appreciate that. We've got buy sell ratio, which is, it's been really volatile right here this last month. Similar to, almost this time last year when we just kind of had this choppiness, not doing a whole lot and back and forth. And so now we're back to a positive buy sell ratio here as well, back above one, I should say, 1.29. So relatively flat. We definitely know that it's the large indices which are really performing. We saw the buy sell ratio on S&P 500 bump up to that 460 range, and Dow at over 3. I should say not 460, but 4.6. So the buy sell ratio 4.6. That just means that for every 4 buys, you've got 1 sell. Okay, so the buy sell ratios are only looking at buys and sells. They're not taking any of these holds into account. So sometimes we can get a big buildup in holds, and then then they bump to one direction or they bump to the other direction if there's a downtrend. So this is it's positive right here. S&P 500 still continue to move. We got some good information yesterday from the Fed regarding their plan on lowering interest rates. They said there'll be 3 interest rate cuts throughout the remainder of the year. Markets are going to like that. The economy is going to like that as well. So continuing that overall uptrend. Now, the upside to this, S&P 500 yesterday and today we're making all-time highs again. Now we've got another support area. So now this area of breakout, this 515, 516 range, should act as a support area. So each time we clear one of these levels, now we're watching for this level to hold up as support. If it doesn't hold up as support, then there could be something bigger going on. But in this overall uptrend, every single one of these breakouts has held that zone. You've got a breakout here, it moves higher, it retests it, moves higher, it retests it, moves higher. This one was a little bit smaller, but every single time we're seeing that. So there's still a buy the dip mentality in the markets as of now. And that's the overall direction that we want to continue to trust as the bias. We just have to be aware that we're well into this trend. We're towards the upper range of this trend potentially at this point as trends just advance. This is a pretty long trend now. This one here, these were pretty choppy as we were kind of pulling out of that 2022 bear market into 2023, some volatility into that year, and then so far 2024 has really just been this last part of this overall uptrend towards that upper end of that bullish range. If we look at some of the overall indices in the sector, I should say sector scans, ETFs, we've got some of those continuing to, we saw 4 or 5 or 6 of those moving to that downtrend zone and hold. They're playing back and forth and back and forth. It's just a really volatile time right here. And then we'll jump into commodities. We'll look at really the 2 that are the most talked about, probably the most relevant, at least at this point. USO, which is oil, seeing that breakout, still in that downtrend in this 6-month time frame. If I'm choosing this time frame and my Fibonacci tool, then it's automatically going to find the trend for that time frame. So in this case, it's taking my high point and low point are here. So it's still considering this a downtrend until this continues to move higher and that starts to shift, but that could take some time. Either way, we're still getting that. There's even though it's in a downtrend, there are still zones that are going to come into play in that downtrend that could act as resistance or support. Even though they might be slightly different than when it's an uptrend, they're still going to matter. In this case, 75 matters, 75.86, around that area, that 76 area of support, because it was there before. It had been created resistance. Now it's support. Okay, and those pivot zones those are often referred to as pivot zones when you have trends that are pivoting or trends that are advancing, and you just simply, that's why I like to have these fib lines on here all the time, because it helps us look for zones, helps us look for locations, support and resistance zones, supply demand zones, pivot zones, call them whatever you want. That's what they are. They're all the same thing, and that is, we're looking for locations where in an overall uptrend where demand starts to come back in again. Demand is buyers. Okay, demand is buyers, and then pushing that back up. And that's the buy the dip mentality. You got to be able to let it go up a little bit, let it pull back a little bit, let it go to a zone, let it find a zone, either where it has been at before and or a fib zone. Okay, when I say that, when I say fib zone, I'm talking about Fibonacci. This tool, again, these are Fibonacci lines or Fibonacci tool drawing numbers. Fibonacci is in lots of different areas. It's known for these proportional relationships, particularly this 618, 382, and 236. The 50% line is not really, it is a Fibonacci ratio, but it's not necessarily derived from the Fibonacci number sequence. And the value of Fibonacci number sequence is it's a proportional relationship. The cool thing, if you were to go out and Google more about the Fibonacci number sequence, and how it interacts and how each number interacts with the number before it and after it, and 3 or 4 numbers down the line, and then the ratios that are created by dividing those numbers together. That's how we end up getting a lot of these different ratios, because they're fascinating. If you look at it, the Nautilus shell, even the human body, are the proportional relationships of this 618, this 62%. It's quite fascinating, but it creates supply demand zones, because humans are ultimately still in charge, whether or not it's algorithm based or logarithmic based trading. Humans still have to program those, and they're looking for certain areas for certain things to be happening. So it's still human emotion and human perspective that's driving a lot of these uptrends, and so Fibonacci number sequence come into play. Okay, here's a good example of this retracement zone, this overall uptrend, this 382 range, right in that area. And really solid support. This is CLSK, which is a crypto miner. Seen a huge amount of volatility in that space over the last 6 weeks or so. Primarily the last 3 weeks, as we're seeing Bitcoin rocket, but some of these miners have not. Most of the miners have not moved. Finally saw a little bit more of a move yesterday. So those Fibonacci zones, those ranges, we're looking for those support areas. Let me go back to that oil. That's where I was talking. But let's jump. We really covered it in oil. So watch that trend is emerging to that upside and gaining momentum now that it's got another springboard, another support area. Okay, the springboard is this. When it rallies up and then it pulls back, think of that as a springboard. You're jumping up. You think of a diver, and they're jumping up, and what do? They come back down, and they bounce off of that diving board, that springboard, and it gives them some flex, and it gives them some push higher. So it's this springboarding, this support area, the demand, and a push off of that area. It really is a really important skill to start to look for zones, supply demand zones, reversal zones, more so than really anything else. We want to focus on trend, the location of the trend, and then we're looking for those zones. And really that's it. That's all we really need, honestly, to be able to look for what we're looking for the vast majority of the time. Let's look at gold, because gold has been another one that's been moving aggressively to the upside. Finally got that breakout a few weeks ago. Good confirmation bar yesterday. A little bit of softness, at least as of now, in gold as we're sitting right here, but it's in that trend. Okay, again, we're in that upper momentum zone. So when we're looking at charts, the primary focus that I'll pull up a chart. This is my exact settings. I want to see that 236. I want to see it moving in this direction, and I want to see it on a 6-month time frame. I almost only use this. Every once in a while I'll go back and forth, but I want to see the same thing. I want to see the same perspective and the same time frame and the same fib levels. And that way, as we're going through and we're looking through charts, let's just, we start off with the new buy list and we say CLSK, what are some things I'm looking for? I'm looking for an uptrending stock. Got it. I'm looking for increased volume on a confirmation bar. Confirmation bar is a big green bar like that, increasing volume, and it's inside or close to that momentum zone. So now it is in the momentum zone here, and now it becomes interesting. If it doesn't have that look, then it's easy just to scroll past it and move along to the next one. If it doesn't have any kind of those criteria that we're looking for. I'm going to talk about a couple of other things here as well regarding selling. I have done some additional trainings in the Muscle Wheel Portfolio group, but I'm going to talk about it just a little bit more today as well, because I know that's a common question for a lot of traders: is where do I sell and when do I sell? Do I do a target? Do I do the full number of shares? Do I leave a runner? We'll talk about some of those terms here as well. Same with Carvana. Carvana, we actually did enter into that as well in the portfolio today. Nice looking setup, momentum zone, confirmation bar, increased volume. Okay, so, and that's that 236. Dave, also keep an eye on this one. This was a really tempting today. That's the other hard thing, is there's so many there's so many stocks to choose from. Sometimes you just can't take them all. So from there also has to be another filtering mechanism to say, okay, I'm going to focus on 90, new buys that are, above 98. That's still, there's just a lot of really nice uptrending stocks right here. You can certainly add into those, make it a little bit smaller positions on each of those as you're building out that portfolio. The Muscle Wheel portfolio, we use 2 to 2.5% allocation. So there are some days where we can get into a couple of different trades and be able to manage a day like today, when you just have a lot of really nice looking patterns that are taking off. Let's jump back over to, so we talked about gold, talked about oil, didn't talk about bonds yet, where this is going to be a chart that we want to keep an eye on as well going forward, is this bond pattern. Because remember that what the Fed is doing with interest rates, as interest rates are moving higher or lower, bonds are doing the exact opposite. So as interest rates move up, bonds are moving down. As bonds are moving up, interest rates are moving down. Well, what does the Fed control? Well, they control interest rates. And so they are talking about lowering interest rates 3 times. Well, the bond market also, I would say the bond market ultimately controls interest rates. Sometimes the Fed will just hop along for the ride, but it is nonetheless, they're both working in tandem of, price discovery and where those interest rates ultimately need to be. And a lot of times the bond market is anticipating where the Fed's going to go, what they're going to do. And so now you've got, a little bit of indecision right here. We'll see. Ideally we get some confirmation to the upside on bonds that the Fed has done its job, that inflation is in check, and now they can start to lower rates. The bond market's got to start to agreeing with that here as well. So we'll keep an eye on that. It's right in a nice zone though. It's right inside that 50% zone. Had a bounce there the first time. Would have been nice to retest back to this support and then move higher. But if it retests this low, even retest that 50% low, there still could be a bounce or an upside for bonds. So something to be aware of there. I had mentioned this, I think I did mention this actually last Tuesday, this bond yield curve, that inverted yield curve has still got to correct itself. So as long as that inverted yield curve looks like this, when you have shorter term yields paying more money than a longer term yield, this is a 2-year treasury, this is a 10-year treasury, this shouldn't happen, okay? This is a broken bond yield curve. It needs to look like this. It needs to look more like that, when you've got the lower end of the curve, the front end of that curve looking, interest rates are lower. The long end of the curve, 30 years, should pay more. That's a healthy looking bond yield curve. And when they start to invert, it ultimately has to resolve itself. Most of the time it resolves itself in a recession. Okay, we end up getting a recession out of an inverted yield curve. And that's also been a lot of talking points happening now as well. But stocks are overlooking or looking past that, at least as of right now, and continuing to move to that overall upside. Now, let's talk about selling winners and selling losers, because one of the approaches that we continue to follow, or the methodology that I continue to follow, is when we're buying into a position, particularly in the wheel portfolio strategy, is we're looking for adding a certain percentage into our pie. Okay, so for example, let's say that our pie is 100,000. Now, you know, 100,000 is a decent sized portfolio. If your portfolio is less than that, fine. Take this down to 10,000, and everything still works the same as far as percentages and allocation. You're just dealing with a whole lot less shares. Maybe you're dealing with 5 shares instead of 50 shares, or 1 share instead of 10 shares, or whatever that number is. It doesn't matter. You know, we don't, this whole world of having to keep up with everyone, or this is, you know, I got this and you got that and we've got this and this and that. I hate that. You know, social media has created, I guess it's always been that way, trying to keep up with the Joneses. When I was a kid, you know, that was what my parents would say. We don't have to keep up with the Joneses. Like, who are the Joneses? We don't have any Joneses in the neighborhood. But it's just that we just want to keep up, and trading portfolios are no different. So in this case, you know, 100,000, if you got 1,000, so what? It's starting, it's getting to go, it's learning a system, it's learning a process, it's being able to utilize equities to be able to grow that money and be able to do it in a way that's systematic, so you understand your risk and you understand your process, you understand why you're buying and when, you understand why you're selling and when, and how you're selling and how much you're selling. So let's talk about that briefly here in 15 minutes. And so number one, when we're adding into a position, we're adding into that position by, and then we set our initial risk capital stop loss. Okay, so let's go and look at a couple of those from earlier today. We had, we added Carvana, we also added Coinbase. So let's talk about Coinbase, where you've got an entry signal location here. The initial stop loss, I like to set that initial stop loss either below that 236 number or below the hold signal of the most recent of the recent hold signal before the buy signal. Okay, so in this case, this bar right here, or close to that, or around, somewhere around that low, as long as it's lower than this 236 number. Now remember, what this 236 number is, that's a Fibonacci number that's drawn by this automatically on this time frame. It'll automatically snap, as long as you have this setting connected, it'll automatically snap to the highest and lowest points on the chart of that time frame. Now, to change those numbers, I think the defaults are set to here, something like that. So if you've cleared your cache, this is also cache based. So if you have cleared your cache and you reset it and you're like, what the heck, this has changed, you've got to reset that. And typically that's already set, the 236. And that 886, I don't ever use it. This is the setting, 236-382-50618. That's enough. And what we're looking for now is we're looking for 3 things. Number one, we're looking for momentum zone. We want to see a stock that's in that momentum zone, moving this direction, and we now have an initial stop loss. Now, 2 things can happen here. Well, I guess 3 things can happen, but the 2 things that are the highest probability of happening are, it's going to go up or it's going to go down. The third thing is it could just sit right here for a long time, but eventually it's going to do that or it's going to do that. But this also creates a potential trade scenario of time. If we have a stock that just won't move and we're getting bored of it and we want to redeploy that capital somewhere else because this is not doing anything, then we could sell it just because it's taking so much time to have a move up or down. Now, there's pros and cons to doing that, and I've experienced all of them, and you've probably experienced them too. And that is, the very next day after you sell something, it takes off, right? Or the very next day after you buy something, it reverses and you get a sell signal. That's just a part of the game. So understanding what that risk looks like. So having a time stop, I call that a time stop, where maybe a stock is not quite moved and you're like, man, I could have been. There's opportunity cost. Opportunity cost is if you would have done something else, the amount of time that you took to do the one thing, if you would have done the other thing, would it have turned out better? So there's opportunity cost of holding any position, and one that's not working, we can exit out of those. So in this case, we're looking for more upside. That's our initial stop. Now, that initial capital level, we want to be able to preserve that capital. Okay, so if I set up the trade right here, and let's say that we did that 2.5%, we had 2,500, and now our stop loss is set up here. Okay, and let's go ahead and let's do that. Okay, we go portfolio. In this case, we'll use that 100,000. Okay, it's going to pull in that current value right now, which is fine. Let's just use that. So now I'm going to look, what does 10 shares look like? Well, 10 shares based on this is 2.5%. Okay, that's right inside of that number that I'm okay with, maybe towards the upper end of that range. So if I drop that down to 8 shares a little bit, that puts us at 2%. Our stop price now, I want to go below that level, but I don't want it to have it too deep. I just need to get below this point because I know that if it reverses back down below that area, I need to exit because it's probably going to retest this. It might bounce around and then move higher. It might bounce around, test this 236 and then head lower. Hey, I don't want to wait around for this to find itself essentially and then rally or not. So we set that stop loss so that we can exit and move on to something different, something else that may provide a better opportunity in that environment. So the stop loss here at 222. That gives us a 0.33 at risk, $340 at risk. Okay, that is this $340 in this initial capital amount here. We draw these out, $2,000 and $300. This is the amount I'm going to lose if I get stopped out, $340, or 0.3% of my $100,000. Okay, if I had $10,000, this would be $34. Would you be okay if this got stopped out to lose $34? Okay, then if yes, move forward. If no, change something. Change your position size, number of shares, or change your stop loss. Those are the only two things we have control over. Obviously, we have control over buying a stock, and you can decide, no, I don't want to buy a stock today. I'd rather go golfing. Okay, you can do nothing too, and that's also a choice. But that doing nothing may or may not provide value to your portfolio. It might provide value to your life. Right, going golfing today versus making a trade today may add more value or mental clarity or whatever the case may be, but doing nothing is also a choice. But typically in trading, we typically don't make a choice because we're either confused, we don't know what we're doing, or we're scared. We have fear. We have fear of loss. And so the fear factor can be taken out by understanding what our risk is and then sticking to it. Okay, if I know that I'm going to freak out if I lose $340 on this trade, well, I've got to do something about it. Well, what can I do? Well, I can change this number to 3. And what does that do? That changes this number to $127. Am I okay with risking $127 to potentially make more than that on the upside? How much more? Who knows, right? That's the momentum style of investing is we expect it to continue to go higher, but how much higher? Who knows? And that's why we utilize the trailing stop method so that we can let the winners continue to work, and the ones that don't get stopped out, we move on to a different one. The very next day, we're moving on. But I can change this number. If this number is too low and you're like, good grief, I'm only investing $800 into this trade, I might as well invest nothing. Okay, that's a choice. That's a decision. If that's too much risk, I can go to 1 share, $4,200. Again, so what? There is no exactness and structure on how you decide to manage your risk. It's all about managing risk, and the gains will take care of themselves. If this stock is going to go up, it's going to go up, whether we buy it or not. Whether or not we have zero control on where it goes from here. What we have to be able to do is focus on our method. We're focusing on uptrending stocks, breakout pattern confirmation, leading stocks with high rank. They're already in an uptrend. They have high visibility. A lot of times they're very, very profitable and making a ton of money. Therefore, they are going to go up because you have big institutions that are focused on those names. And in a nice bullish market like we're in right now, these stocks they'll continue to work. They'll continue to move higher. Now, the game changes a little bit in the bear market, but essentially it's still the same thing. We still have to just manage our risk. Now, okay, that's risk level number 1. Risk as far as the selling process. We're obviously not selling anything yet, but we're setting up our risk profile to be able to deal with any potential volatility. Now, number 2 is what happens if we have a winner. Okay, CLS we bought right here in the portfolio. It's a nice breakout bar confirmation. When you look at it right here, you're like, oh man, I totally should have bought that. That would have been a great opportunity. We talk ourselves out. We talk ourselves out of a lot of different scenarios. And in this case, if I were to go, let's go out to 1 year, and let me actually just pull this back. Go in here just a little bit and pull this back to where that entry location was. It was right here. So if I'm looking at a chart, this should look familiar to you now, right? Because this is the vast majority of trades that we're entering into look just like this. Well, if you're saying to yourself, gosh, look at where it's come from. There's no way it's going higher. Or there's no way it could go higher. Look how high it already is. I should be selling. I should have been buying back here. 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 Yes. Well, when's the best time to plant a tree? 20 years ago, right? When's the second best time to plant a tree? Today. So you miss out on this. You missed it. So what? There's going to be another opportunity. Let's see if it turns out to be an opportunity. And then it continues. So same story. We set up our stop loss. We buy it here. Now, next day, we get a move higher. Next day, it's moving higher, continues to move higher, move higher. Now, here's our entry point here. Okay, and here's where the stock is at now. Now we want to start adjusting or moving or trailing that stop loss from this point here. Now we've got some gains. We want to use, and we want to start to lock in those gains or trail that to the upside. At this point, this 236 works fantastic as a trailing stop area. I can update that trailing stop at this point. Now we're basically at a break-even trade. Okay, if we bought it right here and now our stop loss is here, if it were to retrace all the way back down and we got stopped out of that trade, we're either break even or having a small gain on that. Okay, so and we really haven't had a decent retracement as of yet, and that's okay. Let's see if we get one. If not, then we can always adjust that trailing stop at any time. You can update it every day if you want to, based on that 236 6-month time frame. This is 1 year, but let's move that back now to see. So we were sitting right about here, and as it continued to move higher, oh, sorry, I didn't want to do that yet, but let's go from this perspective here. Okay, and as that's continuing moving higher, we're adjusting that trailing stop. So now our trailing stop has gone from here to here, and here's the stock price. So this high water mark will lock in, and as it retraces back down, it'll stay stuck there, and so will this stop location. If it moves back here, we get stopped out. But now we're profitable. Okay, we entered here, we stopped out here. Did we get the absolute most that we possibly could by selling at this high? No. But I would challenge you to try and pick the exact best time to sell every single time. It's not going to happen. Okay, it only will happen in 2020 hindsight, and that is because it has to happen in real time. It has to happen right now, and right now is a different feeling than looking back at right now 2 weeks from now and saying, ah man, yep, sure enough, that was it. But it's a lot harder to be able to make that decision in real time as of right now. So I could say, well, I'm going to sell, but that'll lead us to the next step here in step 3. So in this case, I'm using a trailing stop, and it's moving higher, higher, higher. We didn't get stopped out. Still not stopped out. Still not stopped out because we didn't adjust that stop loss yet until about here. Now we actually moved it, and we're not going to set it exactly that 236, maybe a little bit lower than that. So we set it, it was around 40, I believe, finding some support, and then bam, here we go. So now we can really lock in and tighten up that stop loss here. But where did we enter? All the way back here. Should we sell here? Should we sell here? No. Why? Because it could continue to go higher. Why would I want to just stop it if it's continuing to work? Okay. Now I will stop it if it starts to show signs that it's going to stop us out. And then if it does renew and give us a new opportunity, this becomes a brand new trade. It becomes a whole new trade to enter into. That's the second area of selling, and that is trailing the stop loss as long as it's continuing to move higher. Now, the third way to sell is to sell a certain percentage at a certain location. Okay, let's use CLS as an example, because CLS right now is $3,700 in value. We have 3% of that of the portfolio in that one stock. So 3,700, that's a lot higher than the $2,500 that we started out with. So the selling process is exiting out of the position at with a certain amount of gain. Okay, so you're selling into the strength just to rebalance that portfolio. I may have a scenario where I'm selling a certain percentage just to get it back to the 2,500. So if this is 3,700 right now, then what I would want to do is I would want to just rebalance back to 2,500, back to my original starting amount. that I started with here, and I move this extra money over to cash. I sell that, but now I still have this initial position. That's called rebalancing. And that rebalance money goes back into my cash. And then the next day, that cash is deployed into a new trade. Okay, so selling into the strength as I want to rebalance. Now, this rebalancing process can happen at any time because look, it hasn't doubled. So I haven't doubled the position size, but it is a big position size, and I've got 48% of gains on there. Do I want to take all of the gains and take it back to 2,500? I certainly could. Okay, so that comes into this play of what is my risk tolerance? What am I thinking? What's my am I worried about too big of a position, or do I want to make sure I lock in some of the gains on this position? If I lock in the gains at this position into strength, I still keep a core position of the holdings. I'm still going to keep the $2,500. Okay, I'm only selling anything over and above that. I'm rebalancing, and then I keep it. And if it doubles again, then we'll sell another 2,500, and we'll keep the shares as long as it's working, as long as that trend moves higher. And every once in a while, we get into a situation where we have a trade like VKTX. So we had a big runner here. We took the bulk of the gains at 69. That was a huge winner, $2,500. We made almost $5,000 of profit. It retraced and we got stopped out on the remaining shares. So we made less than that, but we still kept those initial shares as it moved higher and eventually got stopped out. So we're out of the full position now, but we could re-enter it if we wanted to as well. And there's variations on how to do that. But in this case, we're taking the gains on some winners. We're rebalancing that cash, those gains back into cash, and then we're holding on to a certain number of shares going forward. And eventually they could get stopped out because we're using a trailing stop on those remaining shares. So those are two of the ways to be able to exit winners as well, of rebalancing into strength and then utilizing that trailing stop loss. Lots of information to digest there. I'll make sure that I get this recording up here as soon as I possibly can. And as always, if you're interested in joining me in the Muscle Wheel portfolio, there's a link below in the description for you to be able to access that. As we go through this process each morning on the stock, focus on stop loss, location, which stock we're going to add into, which stocks we're adjusting stops on, and selling as well. Appreciate everyone's time and effort, and have a fantastic day today. Bye now.